So, hello and welcome back. In Chapter 2, one of my favorite things that comes out of it is we start to actually develop the real accounting cycle. We have some steps that we actually use in the business world. Things are first recorded in the general journal, and then they are posted to the general ledger, totaled, and then we prepare a trial balance from them. You could make financial statements next, because trial balances contain all the information that you need to make a financial statement from, but we don't do that yet in Chapter 2. Let's talk about each of these. The journal, also known as the general journal, we get to that a little later. It's called the Book of Original Entry because it's the first place accounting entries originate. They're placed in there in chronological order as they happen. And a journal shows the complete effects of a transaction, all debits and credits involved. It's in chronological order, and doing it in this fashion helps prevent any mistakes from happening because you can easily see that your debits equal your credits. The ledger that we post to is also called the general ledger. We start getting to these terms a little later in the book, but I like to use true accounting terms right from the beginning. The general ledger contains every single financial statement account that we have. All assets, all liabilities, all assets, all liabilities, and all owner's equity accounts, including capital draws, revenue, and expenses. If you want your financial statements to balance at the end of the accounting period, you can't lose any of them, so they're all kept together in the general ledger. Here's an example of what an account in the general ledger looks like. This is the cash account. Its account number is account 101. The cash account has been debited on June 1st, 2012 for $25,000, and the balance extended was credited on June 2nd for $8,000. 25 minus 8 is a $17,000 debit balance, and so on. Every financial statement account would have an account like this in the general ledger. Once the general ledger is totaled, we prepare a trial balance. And this is an unadjusted trial balance. Again, terms that we'll get to in the next chapter. And all the trial balance is, it's a complete list of all the accounts in the general ledger along with their balance as of the date shown in the heading of the trial balance. And it proves the equality of debits and credits just by looking at it. In this case, our debits equal $10,500, as do our credits. So we have developed an accounting cycle then that we'll use for the remainder of your studies of accounting. And the first step is to record transactions in a general journal. The second step is to analyze and record transactions in a general journal, post to the general ledger, and then prepare trial balance. And nope, even though you could, we're not ready to make financial statements yet. Here's a picture of a general journal. This mirrors what happens in your textbook for the first several transactions. Let me point out a few things to you about this general journal. You list the date only once. As far as year goes, until the year changes. You list October, and you don't need to list it again until October changes. And then you list the date of the transactions. Debits are shown first, credits are shown second, and they're indented, and there's a little description of each transaction. The reference column means that these have indeed been posted to the general ledger accounts. We'll look at that in a minute. Now look how nice this general journal looks. No chaos. Debits first, credits second, credits indented, everything nice and neat, little explanation. We don't want any chaos in our accounting system because chaos in, chaos out. No chaos in our accounting system. So accountants try to be neat and orderly. And you can see at a glance how easy it is to read and see the results of this transaction. Once you've put things in the general journal, it's time to record them into the general ledger. I have brought forward a general journal with one transaction in it made on September 1st, 2012, where cash was invested by the owner resulting in this journal entry. Notice that when we debited cash, we went down to the cash account, account 101, and debited it for $15,000. We wrote J1 because this came from Journal 1 and extended the balance. Put the year and the date in it. You can tell by looking that we have this $15,000 transaction coming in from the journal on page 1 from cash. Owner's capital was credited for $15,000, so we came down to the owner's capital account number 306, wrote from journal page 1, $15,000 credit, extended the balance, and came back up and added number 306 to show that it's been posted. You can see both of these accounts have been posted because of the posting reference being in place. You can see that where they came from. This is called referencing and cross-referencing. And it's a good example of the second step of the accounting cycle. First you journalize and then you post and total. The third step then is to prepare a trial balance. This trial balance mirrors the one in your textbook. It's for Pioneer Advertising Agency. It's trial balance. And we know who it's for because the entity concept says it's for just this business. Nothing else is on here. It's a trial balance. It says at the close of business on October 31st. This is every account that's listed in the general ledger. The debits are shown as debits. The credits are shown as credits. The top columns are totaled. And you can see that the debits and credits equal. Wahoo! Our trial balance is a balance. So there's your accounting cycle from Chapter 2. You analyze and journalize into the general journal, you post to the general ledger, and you prepare a trial balance. But we're not ready to make financial statements yet. We're making a big deal out of this, aren't we? Could be some problems in the trial balance. The trial balance may be in balance even when a transaction is not journalized. A correct journal entry is not posted at all. Journal entry is posted twice. If a journal entry is posted twice, you'll be out of balance, or you'll be in balance, but you'll still have mistakes in both of those accounts. You could have used an incorrect account, like putting something in its place that belongs in accounts receivable. And there you could have offsetting errors, so there are limitations to a trial balance. But yet, this isn't why we don't make financial statements yet. We're not ready to make financial statements in Chapter 2. Some of the accounts, by the end of the month, have the wrong balance. Can you think of some reasons why? Stay tuned for Chapter 3, and we'll talk about it soon. Have a great rest of your day. See you later.